I clearly audible to everyone? Here we start the Bank Promotion Exam 2023 batch first class. That is RBI circular gist for the month of September 2022. Hope I am clearly audible to everyone. Those who are watching us live from YouTube, LinkedIn, and Facebook, please give a thumbs up and comment whether we are clearly audible to you or not. It's a very important session as far as bank promotion exams are concerned, and for any other exam RBI circular serves as a Bible. So we will start in a minute, in a second. So I need your undivided attention towards this session. So can I get the first ever confirmation about our class, whether it is clearly audible to everyone watching tonight or not? So yes, RBI circular gist for the month of September 2022 with all MCQs. Before we go forward, I must be telling you all that we have launched a bank promotion exam dedicated course for all banks. So you can find it in our website knowledgeis.in/promotions. It is available for all banks, including initially we have started with IDBI last year. IDBI, Punjab and Sindh, PNB, and Union Bank was a huge success. So we are starting with these banks first. PNB and all for all banks, we have a dedicated course. Without wasting further minute, let's start the dedicated session. Here is the dedicated link. Link is there in the description. One stop link for aspirants, knowledgeist.in/promotions. Okay, so yes, knowledgeist.in/promotions. Yes, the first ever circular for the month. RBI guidelines on digital lending. You know that there are so many digital lending applications. Some are backed by Chinese companies that are trapping the common Indians on the debt border. So now RBI has come up with a clear cut guidelines to regulate these applications and these organizations. So it is to be said as a new age digital lending in India, right? So, what are there in the new age digital lending? Let's look into it. According to the new guidelines, all loan disbursals, repayments are to be executed only between the bank accounts and the borrower and the regulated entity. So, no disbursement is to be made to the third party, and third party in turn will provide the loan to the applicant. So, that is not going to happen in India anymore. So, whenever you download an application, online lending application, what happens? They they collect your credit information, that is civil kind of thing, credit information. Then they get a loan on behalf of you, and that amount is credited to their master account, to their main current account, and from that account the third party gets loan. So now they charge an exorbitant rate of interest on your lending, on your small portion of lending, thus making you making you get trapped in the lending framework. So RE is needed. RE means regulated entities. Reserve Bank of India is the regulator. RE are the regulated entities. The entities that are regulated by RBI. Who are they? They are the banks, NBFCs, or any platform, digital lending platform, microfinance institution, those who are under tight regulation of Reserve Bank of India. So REs need to ensure that the disbursal is not made to a third party account, including the accounts of loan service providers and their digital lending apps, DLA. So here you get two new acronyms, that is LSP and DLA. LSP stands for loan service providers and DLA stands for digital lending apps. Clear? Yes. Yeah. So just a second. Yes. Is it clearly visible to everyone? Yes. Any fees or charges payable to LSPs are to be paid directly by the regulated entities and must not charged by the LSPs to the borrower directly. So any charge these entities are going to provide or going to give to their lending partners, it is not to be charged by the borrower, or it will not be debited from borrower's account directly. These institutions have to bear the fees, the costs of the lending partners. Any penal interest or charges levied on borrowers must be based on the outstanding amount of the loan. Penal charges are to be disclosed upfront on the annualized basis of borrower's key fact statement. So whenever you take loan, in small letters there are so many terms and conditions are mentioned. So that is called key fact statement. The all inclusive cost of digital loans for the borrower is to be disclosed upfront by REs, and REs to provide a KFS, key fact statement, to the borrower before the contract is made or contract is executed. Clear? So REs have to prominently publish a list of their DLAs and LSPs to engage by them on their website, and they must ensure that these LSPs or DLAs engaged by them do not store the personal information of the customer. So now these application and third parties cannot store the account number, PAN number, Aadhaar number, name, personal informations of the customer anymore. So these instructions are also applicable to the existing customers, those who are availing fresh loans. So in case they have stored the data in their earlier application, they need to delete it. Clear? Is it clear? GST payable on service charges for cash deposited by non-chest bank branches to the currency chest. So when there is a non-chest bank branches, they are attached to the currency chest. They don't need to pay any service charge, any charge on the notes. But branches, those who are away from the chest branch, are to pay a certain amount, 5 rupees or 8 rupees service charge on the money or the bundles, 100 piece bundles they receive. Okay, so now GST, it's clarified. It was earlier there, but it was not clarified. So Reserve Bank says, wherever it is rupees 5 or 8, there are two denominations, 5 rupees 5 or rupees 8, depending upon the place or location it will be charged. So on that 5 rupees and 8 rupees service, GST is applicable. GST at normal 18% is applicable. Okay, RBI on 6th of September 2022 has issued a clarification on various queries regarding the applicability of GST on the service charges levied on cash deposits by non-chest bank branches to the currency chests. As per the earlier notification, as per the earlier notification, the service charges to be levied on cash deposited by non-chest bank branches shall be increased from existing rate of rupees 5 per packet of 100 pieces to a higher rate of subject to a maximum rupees 8 per packet. So earlier the charges were there, only GST is to be collected. So there are two new loans lended by Exim Bank. So I will just tell the details. It is to Swaziland and to Eswatini, Swaziland. Okay. So on behalf of the GOI, Exim Bank gives loan on behalf of GOI. You don't need to you don't need to go into deep detail of these loans, but just know the source, the destination and the amount. Nowadays they ask anything in the name of RBI circulars, in the name of current banking development. Okay. So Eswatini, I believe it is the capital of Swaziland, not Switzerland. It is Swaziland, a different country. Okay, so for building a new parliament in Eswatini. Okay, so under the LOC, the terminal utilization period is 60 months. It will be utilized on 60 months. Next loan extended by Exim Bank, and whenever Exim Bank extends a loan, it is on behalf of GOI, its line of credit, etc. And this is $448 million to Uzbekistan for infrastructure projects. Little detail about Exim Bank, set up in 1981 under the Act of Parliament to finance, facilitate, and promote India's international trade and investment. So, India's international trade and investment is financed by Exim Bank. In other words, Export Import Bank. It is wholly owned by GOI. Commenced its operation in 1982. Okay. There is a question from Santi Sharma. Hi sir, I just heard from that next year there will be no vacancy in RRB. So in that case, many RRBs has to shut down. They are having acute manpower shortage. At least 40% of manpower shortage in all RRBs. If they will not they will not recruit. They have to shut down their operation. So nothing like that. Okay, and government of India is has told every bank to nowadays, every PSBs to recruit, to have a recruitment plan every month, and RRB unions have demanded similar thing to be adopted by RRBs. They have written a letter to Government of India and DFS. So you know from that how serious the manpower crisis in banks. Okay. So this RBI circular gist is a exclusive class for bank promotion exams. So you can find all the detailed courses in the link given below. RBI issues review of prudential norms in regard to risk weights for exposures guaranteed by credit guarantee schemes. RBI has issued notification regarding the review of the prudential norms of risk weighted asset. You know, any asset or investment in bank carry a certain risk weight. Not only the assets, but also the investments done by banks carry certain risk weights. So even if you are investing or giving loan to someone, giving loan, or you are investing in some certain bonds, there also you have to keep aside a certain risk weighted asset percentage for future use. So what is that? Why is so? Because banks fear that these investments or these assets made by them could could become bad debt in coming days. So in case anything wrong happens, they have a reserve to counter or mitigate that risk. So what is that? What it is saying? The loans guaranteed by the government agencies such as Cgt Msc, CRG FTLIH, and NCGTC should carry 0% risk weight. Why? Because these are guaranteed by government. So a sovereign guarantee. Anytime government gives a guarantee is named as sovereign guarantee. So whenever there is a sovereign guarantee, it is assumed to be a secured asset or secured lending or secured investment. So in that, you don't need to worry, or you need to set aside a certain percentage of that asset. Okay. So it is now advised the risk weight of 0% shall be applicable in respect of exposure guaranteed by the existing or future schemes launched by Cgt Msc, CRG FLIH, and NCGTC. I will be telling you what are the schemes of Cgt Msc and NCGTC. The prudential aspect, the guarantees provided under these respective schemes should comply with the regulatory requirements for credit risk mitigation, which inter alia require such guarantees to be direct, explicit and irrevocable and unconditional. Whenever there is a guarantee given by Cgt Msc or CRG FLTIH and NCGTC, and it is unconditional, irrevocable, explicit and direct, there we don't need to worry. When there are no certain term and condition and it is direct, then that portion of the bank credit should be treated as zero risk asset. Okay. So restriction on permissible claims, where the terms of the guarantee schemes restrict the maximum permissible claims through features like specified extent of guarantee coverage, clause on fast loss observation by the member lending institution, payout cap, etc. There the 0% risk weight shall be restricted to the maximum permissible claim. So what happens when NCGTC or CGTMSC give you the guarantee? There are certain terms and conditions. When there is no such term and condition, it is zero risk. Whenever there is certain term and condition, if customer fails to pay, the fast default is to be observed by the bank. So up to that amount, bank has to bank has to keep aside a risk weight, and the rest amount is to be treated as zero risk. Okay. Whenever up to a certain amount it is covered, like up to 5 lakh is covered in a 10 lakhs loan, so 5 lakh loan is treated in normal risk weighted asset ratio. I will show you the risk weighted ratio percentage, don't panic. But the rest 5 lakh will carry zero risk percentage. Clear? Okay, so any future scheme or the existing scheme launched by these institutions will carry zero risk. What are the risk weights? For housing loans, gold loans, loans guaranteed by ECGC 50%, housing loan above 75 lakh, retail loan up to 5 crore 75%, forex loan to PSU, commercial real estate, consumer credit, PL, education loan carry 100% risk, credit card, capital market exposure 125%, investment in venture capital 150 percentage. If you give 1 lakh loan to 1 lakh allocation to investment on venture capital, you have to keep aside 1.5 lakhs. When you invest in capital market worth 1 crore as a bank, you have to keep aside 1 crore 25 lakhs because the risk weight is 125 percentage. Clear? So CGT Msc highlights. What is the CGT Msc? It's micro and small enterprises up to 2 crores of loan. Interest rate charged as per the RBI guidelines. Maximum 85 percentage coverage given to the member lending institutions, MLIs. More than 100 MLIs are covered under CGT Msc. Okay, manufacturing and service sector is eligible. Current CGTMSC schemes are credit guarantee scheme for banks, for NBFC, sub debt schemes, or PM Sonidhi scheme. Okay, subordinate debt is recently launched post COVID. Then comes the NCGTC. It's a private limited company. Um, incorporated under Companies Act in 2014. It is established by the Department of Financial Services. The current schemes of NCGTC, CGFSD, skill training, educational training, MA for MSME, CGFF for factoring, CGFMU. This Mudra loans of your bank is covered under CGFMU, micro loans, CGFSI for stand up loans. Okay, so these are the current loans. Next point, RBI enables cross-border bill payment via Bharat Bill Payment System. Okay. In case anyone is new to the platform, don't hesitate to subscribe. The second, guys, anything related to digital lending, digital payment are very important for your exam point of view. So let's see. RBI has allowed BBPS Bharat Bill Payment System to process cross-border inbound payments facilities. RBI allowed BBPS to process cross-border transactions or inbound payments coming from the foreign lands to facilitate payment of utility bills by non-resident Indians. This step to allow acceptance of cross-border inward payments will facilitate NRIs to undertake utility, education, and other bill payments on behalf of their families in India. So this very specific scheme is for NRIs residing outside India want to pay bills for their resident Indian family, so they can do by this new amendment. Okay. Most of you are asking various queries in our comment section. Our expert bankers are there to answer you. So rely on these answers given by our expert bankers. It is not necessary that I answer everything. We have a core team of expert bankers. They answer you. So please rely on that. And I will answer some of your queries at the end of this. Unlike before, when foreign inward remittances received under RDA, rupee drawing arrangement could be transferred to a KYC compliant beneficiary bank account through only NEFT, IMPS, or any electronic transaction mode. This RBI move will allow direct bill payment by NRIs through BBPS residing outside the Indian mainland. BBPS is owned and operated by NPCI Bharat Bill Pay Limited. Most important, it has transformed the bill payment experience in the country by offering an interoperable platform for standardized bill payment experiences. Interoperable means from one platform to another platform, it could be transacted easily, like payment made from Paytm to Bharat Pay or Paytm to phone pay, etc., are called interoperable. Okay. As per RBI circular, last month over 20,000 billers have been onboarded by BBPS. Now, RBI asks Urban Cooperative Bank to appoint compliance chief by April 2023. You know that RBI is nowadays more tight on urban cooperative banks and NBFCs, and also they are spreading their ambit towards the digital lending platform. And also, as per the new update, RBI is on its way to launch e-rupee digital payment, digital rupee very soon. So RBI gave tier 3 banks, those with deposits above 1000 crore and less than 10,000 crore, time till October 1, 2023 to appoint chief compliance officer. Okay, these are related to cooperative banks, but you just know the details. What are the requirements? Okay. RBI said the CCO shall have direct reporting lines in the to the managing director and chief executive officer of these banks. Now, RBI amends some provisions of interest rate on deposits. Very important. Whenever there are changes in deposit rates, it appear in your bank exam. The RBI has amended certain provisions related to reference rate provider and eligibility of opening of savings account in its master directions on interest rate on deposits for scheduled commercial banks and cooperative banks. Remember, after the lever is discarded, lever is the London Interbank option rate. When lever is discarded, there are so many alternative reference rates that are in use. So there was a doubt which reference rate and what is to be quoted whenever there are interest rates to be calculated on deposits like FCNRB accounts. So accordingly, bank will now use reference rate displayed by Financial Benchmark India Private Limited for arriving at an interest rate for foreign currency non-resident bank deposit, which is popularly known as FCNRB. So now, whenever banks are going to give their interest rate or quote their interest rate, they have to adhere or they have to link their account, their interest rate to any benchmark, any alternate reference rate which is displayed in the site of Financial Benchmark India Private Limited. Financial Benchmark, which is called FIBIL, Financial Benchmark India Private Limited. Clear? Because the most trusted lever is no more trusted, it is no more used as a alternate reference rate. What is lever is the interest rate which was earlier widely used by various banks internationally to quote their rate whenever there are forex transactions, etc. They easily say lever plus 1%, lever plus 0.25 percentage, 0.15 percentage. They quote interest rate like that. Instead of lever, there are various other interest rates that are widely being used like SOFR, SONIA, etc. Existing provisions required banks to use reference rate such as the overnight alternative reference rate for the respective currency or swap rates quoted or displayed by the Forex Dealers Association of India or FEDI. Clear? RBI also said that banks should not open savings account in the name of government department or bodies depending upon the budgetary allocation for performance of their functions or municipal corporation or municipal committee, panchayat samiti or any political party or entity other than individuals, karta or Hindu undivided family and organization listed in Schedule 1. The central bank explained that for the purpose of these clause, political party means an association or body of individual citizens of India which is or deemed to be registered with the Election Commission of India as a political entity. All other all other information remains changed. Liquidity adjust facility change in rates because of the bi-monthly monetary policy committee. So RBI Governor Mr. Das has announced the MPC decisions. RBI has hiked the benchmark lending rate by 50 basis point to 5.9 percentage. Increase in the policy repo rate under the liquidity adjustment facility by 50 basis points to 5.9 percentage. Consequently, the standing deposit facility rate SDF stands adjusted to 5.65 percentage. These decisions are in consonance with the objective of achieving the medium term target for consumer price index inflation CPI inflation of 4 percentage plus minus 2. Okay. So for the calculation of inflation in India, RBI quotes CPI, not WPI. So these are the changed rates, policy rates, and reserve ratios for your use. Okay, please take a note of it. 5.9 policy repo, SDF 5.65, MSF 6.1, bank rate 6.15, MSF and bank rate both 6.15, fixed reverse repo 3.35, CRR stands 4.5, SLR at 18 percentage. Okay, RBI retains the inflation projection at 6.7 percentage for fiscal year 2023. Reserve Bank last Friday retained its inflation projection for current fiscal year at 6.7 percentage amid global uncertainties. The September quarter of 2023 RBI projected retail inflation written inflation at 7.1 percentage. For the third quarter, it is estimated at 6.5 percentage. RBI cuts the growth forecast of India to 7% in this current fiscal, and Reserve Bank of India slashed the growth projection to 7% from the earlier 7.2 percentage. Now RBI releases the new list for the upper layer of NBFC. You know that RBI has divided NBFCs into three parts: upper layer, medium layer, bottom layer, mid layer, bottom layer. So depending upon their layer, they are regulated by Reserve Bank of India. So sorry, upper layer, middle layer, and a top layer. Okay, top layer, the top NBFCs will always remain on top layer. Upper layer keeps changing. Okay, so these are the list, may not be that useful for you. So now we will go to the MCQ part. Okay, this is the MCQ. I will take it to the big screen so that you will have no issue. Just a second, I will take it to the big screen. RBI releases the guidelines on digital lending. Digital lending. According to the guidelines, all loan disbursal repayments are to be executed only between the bank accounts of the borrower and the regulated entity. Point two, any fee or charges payable to the LSPs are to be paid directly by REs and must not charged by LSP to the borrower directly. Which one is not correct? Point number one is incorrect. Point two is incorrect. Both are correct. Both are incorrect. Your answers, please. Yes, Abhay Singh says C. Yes, both are correct. Both are correct. Right. So the Reserve Bank of India on 6th September 2022 has issued clarification on the queries regarding the applicability of GST on service charges levied on cash deposits by non-chest bank branches to the currency chests through this notification. It has been clarified that the amount levied on the cash deposited by non-chest bank branches to the currency chests are exclusive of applicable taxes. The service charges mentioned above shall read as how it will be read. Please tell us. Yes, this is the right options, because nowadays the question making pattern has changed. They ask a lengthy question with lengthy options. So that's why we have changed in our approach too. So please answer it. 5 plus applicable taxes per packet and 8 plus applicable taxes. So how it is read? It is A. Okay, 5 plus applicable taxes per packet and 8 plus applicable taxes per packet. Next question. On behalf of the Government of India, Exim Bank has extended line of credit of which amount to the government of the Kingdom of Eswatini or Swaziland, earlier Swaziland, for the construction of new parliament building in Eswatini? 111.28 million, 109.28 million, 104.28 million, 108.28 million. The right answer over here is D, 108.28 million. Next question on your screens. Exim Bank extends a line of credit worth how many amount to Uzbekistan for some infrastructure project? $548 million, $448 million, 418 or $349 million. The right answer is $448 million. Deepak Tiwari is right. Yes. Next question on your screens related to MPC. On the basis of assessment of the current and evolving microeconomic situations on the MPC has decided to increase the policy repo rate by what percentage? 50 basis point to 4.4 to 4.9 to 5.9 or 5.5. Liquidity adjustment facility stands revised to 50 basis points to 5.9. Right? Next question on your screens. What is the current rate of SDF? What is the current rate of SDF? 5.65. Yes, Abhay Singh is right. Abhay Singh is right. So we came across Cgt Msc through the circular. So I thought that we will put out some Cgt Msc MCQ because this month circulars were very less. So they have discussed about Cgt Msc, the loans guaranteed by Cgt Msc and other credit guarantee organization to be kept as 0%. So here are some MCQs related to Cgt Msc to make this class interesting. The validity of the scheme, credit guarantee scheme for subordinate debt for stressed MSME is extended till which date? The validity of the scheme CGT MSc date for stressed MSME is extended till 31st March 2023, which is introduced in the wake of coronavirus. The CGSSD is guaranteed by CGT MSc up to the extent of what percentage? Can anyone tell me the answer? The credit guarantee scheme for subordinate debt (CGSSD) is guaranteed by CGTMSC up to the extent of what percentage? It is up to 90% of the original loan. Credit guarantee scheme for co-lending is not applicable to RRBs, small finance bank, cooperative banks and local area banks, or otherwise it is applicable to all the banks mentioned above. Yes, it is applicable to all these banks. It is applicable to all banks. Sorry, it is not applicable to all the banks. Okay, is not applicable to RRBs, SFBs, cooperative banks, and LABs because it is applicable to scheduled commercial banks only. Recently, the eligibility criteria for SFB, Small Finance Bank, to categorized under MLI, Member Lending Institution, under CGTMSE stands changed. Which of the following criteria is not there anymore? Minimum net worth of 100 crore, minimum paid up equity capital of rupees 100 crore, external credit rating of triple B or above, net profit of previous 3 years. The answer is B. This criteria minimum paid up equity capital is not there for 100 crores. It is changed. The minimum net worth of 100 crore is accepted. So yes, CGTMSC has decided to increase the threshold for waiver of legal action while invoking the guarantee to rupees dash per claim based on the aggregate outstanding amount considered eligible for claim settlement as against the present limit of rupees 50,000. So it is now increased. Very good answer. It is increased to A. Thank you, Vishal Jain. 1 lakh from earlier 50,000 to 1 lakh. Okay. Hybrid security model. The bank is allowed to obtain collateral security for a part of the credit facility, whereas the remaining part of the credit facility, up to a maximum of rupees dash amount, can be covered under CGTMSE. 100 lakh, 150 lakhs, 200 lakhs, 250 lakhs. So, under hybrid security, for certain portion of the amount, the borrower needs to arrange a security, and rest part of the loan will be secured by the guarantee provided under CGTMSE. So, up to what amount? The portion that is to be guaranteed by CGTMSE under hybrid security scheme is up to what amount? Yes, it is up to 200 lakh. Normally, it is also 200 lakh, 2 crore. Also, on the arrangement of hybrid security, where the borrower needs to arrange certain portion of the loan, guarantee for the certain portion of the loan, the rest could be maximum 2 crores. There is 0% risk weight in case of claims on RBI, DIGCC, that is Deposit Insurance Guarantee Corporation, CGTMSC, Credit Risk Guarantee Fund Trust for low income housing. However, the claims on ECGC attract risk weight of dash percentage subject to maximum liability amount specified in the whole turnover policy taken by the bank. Okay. So what will be the risk percentage, risk weighted asset percentage, if the loan is guaranteed by ECGC subject to a maximum liability amount based on the turnover? It is 20 percentage. 20 percentage. CGT claim not yet lodged or lodged but not yet settled, the minimum indicative settlement amount under general settlement scheme shall not be less than what percentage of the total CGT eligible claim amount based on the extent of the guarantee for the respective amount. It is 75 percentage. Abhay Singh, Gaurav, all of you are right. Yes. Credit guarantee coverage for financial facility under agriculture infrastructure uh, fund will be available to the eligible borrowers under credit guarantee fund trust for micro and small enterprises. Scheme for loan up to rupees 50 lakhs, 1 crore, 2 crore or 5 crore. The right answer please. It is 2 crore. It is 2 crore. Okay, under CGSSD scheme, promoters of the MSME unit will be given credit facility by the lending institution equal to what percentage of promoter stake in the MSME entity, existing total outstanding exposure of the entity or rupees dash whichever is lower. So there are two options need to be filled: 10 percentage 50 lakh, 15 percentage 75 lakhs, 10 percentage 75 lakhs, 15 percentage 50 lakh. The right answer is 15 percentage and 75 lakh, whichever is lower. Okay. With this, we come to an end of the session. Hope this session is useful for everyone. We have launched a dedicated uh, promotion exam batch. Same is found in our website. You can find out. Just visit knowledges.in/promotions. Hope this session is useful to everyone. See you in the other side of knowledgeist in our applications. Students joining this can ping us for faster update of the courseware. Thank you again for your love, support, and time. Thank you. Abhay Singh saying quite informative session. Thank you, sir.